All right. Hello, you trader nerds. Real traders never trade alone. They trade with their fellow nerds like Auction, like CE7, like DB, like Dwayne, like Edwin, like Hal, like Herb, like Jim, like John, like Ken, like Matt, like Mikey, like Mo, like Notional Ed, like Robert, like Thomas, like Vicky, like Bo. So good to see all of you. Hope you're all having a wonderful, wonderful day. And thank you for joining us. Uh, we finally get a down day. Let's look at the market. Finally get a down day. Now, you know what that means. A down day of 0.4% or more generally gets us into our next tranche of the Black Swan hedge. So we finally got it, even though it looks like we're about to go back up. So hopefully we'll get a Black Swan hedge started again. But you got to look, and remember, this is what we figured out. We've got to look at our risk tab to see if we can do that. So markets, let's see, VIX is up 17.22. And volume looks pretty average. And we're below VWAP, we're below the hourly mid band. So all is well. Let's look at the big green monster. Big green monster got up to 56.65, and it has now gone right at the point of control, which is this 56.21, and we're a little bit below it. So we are oversold for the fair value zone above. So may spend some time in here before it continues its rise up. And we think it is a rise up because, oh, it's hard to talk, y'all. I apologize for being a little sick. Okay, here. We've broken our trend line. Now we're going to the downside. So we may actually be in a consolidation pattern now. Let's just draw that. We may have entered an area of consolidation. Let me clone that and bring this one down. We may be in an area of consolidation before we make our next move. So look like we were going up. Now a little bit of consolidation. The volume has gone down in this consolidation period. And then we'll probably pop back up to the upside is probably what we'll do. But we don't know. And it really doesn't matter for what we do, but it is kind of nice to fiddle around with it a little bit. I sound like Bill Clinton. By the way, did y'all hear Bill Clinton last night? Oh my God, it's sad. That dude's old now. He talks like an old man. I'm like, I guess it's going to happen to all of us, but my God, it's just, as you remember when Bill Clinton was elected, I mean, he was like young and stuff. He was like in his 40s, and now he's like 78 or so. But I guess it happens to all of us. We all get a little bit on the old side. So consolidation in the markets, consolidation with Bill Clinton, and everybody sounding old. And I don't know, it's just kind of sad. All right, so let's see what we're going to do today. Let's go over here and let's do our stuff. It says we're up $7.50 on the day. Let's see if that's actually correct. Let me go to my phone and get it here. Well, I'm breaking out in sweat. The dog got under the house and has tore some of our ductwork out. And that dog has probably cost me $5,000 worth of broken windows. When there's a storm, the dog gets upset and you can't let her in the house because she goes nuts. She'll tear everything up. And she's broken windows trying to get in the house. And probably, we think we've spent over $2,000 just in windows. It's incredible. All right, let's see here. It says 76,015. 76,015. See if we're up or down. Up a little bit. 76,015. Play it, Rico. And you remember my neighbor poisoned one of my dogs and killed one of my dogs. And I hadn't forgiven him yet. I need to, I guess. You need to make, good with your neighbors and stuff. And then I almost got in a fight with Papa at the football game over me blowing the Venezuela, whatever those horns are. And he said it was obnoxious. And I said, "You're obnoxious, pal. How about that? How about that, Papa?" Unbelievable. All right, but I digress. It's just because I got a fever, I think. I'm not exactly there. So let's see what our Greeks and ratios are. Our Greeks and ratios are -4, -19, -4, -19. And our buying power usage is piddly nothing. Piddly nothing. Let's go to positions. We'll go to cap requirement. And then remember, we're using this under the cap requirement. And we're using whichever one is higher. Initial requirement is 582. My current requirement is 792. Let's make sure that that's updated. 792. Then we've got our bill in there. So let's go 792. 792. Still the same. All right, so everything looks good. Looks good. Now, here's what we need to do. We need to look at our risk analysis, all right? Going up 40 points, going down 20%. How are we going to be? Well, we need to take off order legs. So here's where we're at right now. We're at 24,104 to the downside. So we'd get a nice little pop in the downside with our current positions, the 12 and 20. So what would we do if we sold 3 today on the down day? Now, here's where we got in trouble last time. We didn't analyze this stuff. So if I sell 3 today, we'll go in here, we'll go to trade, and we'll go to ES, and we'll go down to about 60 days or so. So let's go to 70 days. Let's go to where we can sell something for $3. So we got this 35.50 here. If we were to sell 3 of these. Now, this is where we got in trouble last time. We didn't analyze this stuff. Because right today, this is probably what I would do, is I just say, hey, man, let's go ahead and sell this for $3.10 and be done with it. But watch what happens when we go to the risk analysis. What you need to do is to hit add order legs over here to the right. Now, do you see what has happened? What has happened is, even though I've got 12 and 20 here, if I add these 3, I now do not have a hedge. I am hedgeless, and I don't want to be hedgeless. So what we're going to do is we're going to do a 3-5 diagonal, which I call a prop up black swan hedge. Okay, so that's what we're going to do. So we got to get 5 in here somewhere. So let's do this, and we'll be unhedged for a minute. But let's see if we can get closer to that 320. Got it. Beautiful. So we got 320. So let's now go, we did the 35.50s at 70 days. 35.50s at 70 days. Let's go put it in our thing here. 35.50s. ES. We did 3 of them. We'll call this BSH2. What do we say? 35.50 puts. And this is short hedge at 70 days. And we got into it 822.24. And we got in at 320. All right. That looked right. 320. Now we can use our black swan hedge calculator to figure our break evens. If we sold something for 320 and we harvest for 20 cents, if we pay $1.72 for the loans, then we should break even on this. So what let's do is let's go in and now make sure that was the 35.50. Hal would have told me if it wasn't. 35.50, good. So now let's go in. That's at 70 days. Let's go in about 30 days. And let's go to 40 days. Let's go to 43 days. And let's see what we can buy for that $1.72. Here we go. The 3700s, maybe $1.70. maybe $1.70. So what I'll probably do is do the 3600s for $1.55. Let's see if we can do those and buy 5 of those. Let's see what this looks like. 1, 2, 3, 4, 5, right? And now let's go back to our little gadoo over here. And let's update price and IV, update positions. There we go. And now let's add order legs. Beautiful. Now look what those 5 have done. We've got the 3 shorts now, and we've got the 5, and we're much better off than we were at the start of the day. Look at this. At the start of the day, we were at 24,000. Now doing this 3 and these 5, we're at 33,000. Beautiful. It's gorgeous, right? So let's do that. So let's go the 3600s for $1.55. We want to pay as less as possible for it. We're going to try $1.45. We're going to try $1.50. And we are filled for $1.50. So we got 43 days. 43 days. We did 3,600. See, we're higher strike than what we sold. Isn't that cool? So 3,600 for $1.50 at 43 days. 3,600, 43 days. 3,600, 43 days.
That's awesome, Bobby.
It is kind of awesome, isn't it?
Yes, sir.
You like that, huh, Christian? Yeah, I mean, I'm sitting here now. Now I'm going to tell you guys this. I tried to do this in 2020 after I doubled my account. And I was not able to successfully do it. And I don't know if it was because I didn't have the patience to do it. I don't know what it was, but something kept me from keeping on doing this. But the deal is we want to continue building the wall, and we want to try to build it for free. So, you know, this is what we're trying to do. So we did this for $1.50. But maybe we'll find out why I couldn't do it before. Maybe we're not able to do this. Maybe there's some reason we can't do this. But I think we can. You sell more than what you buy. So this is BSH2. And puts in the long hedge. Now, the only thing is I need to make sure that this, after this expires, that we don't have the shorts on. At some point, we're going to have to take those shorts off. So, but what we're going to do is you'll see, this is the long hedge, 8, 22, 24. All right. So we brought in $474. We paid out $384. And let's see what our break-even calculator says. We did these for $1.50. After we harvest those for 20 cents, this should be a $54.98 income trade. That's what this should be. That's what we should have it. All right. So what we're going to do now is go put our GTC orders in. So let's go over here and let's go to trade. And let's go to 70 days or whatever it was. This is a diagonalized black swan hedge. So here are these. So we want to close those at 20 cents, right? Close these positions at 20 cents. And we want this to be a GTC, which is good till cancel. Now, what we also want to do is we want to buy the 3,500s in the same expiration. And we want to do that when we can do it for about $1.55. $1.55.
Bobby, you already spent that money buying your diagonal.
That's what I was going to say.
Wait a minute. I've already spent the money buying the diagonal. Yeah, but here's what's going to happen though. What's this, Hal? Here's what's going to happen is once this fills, then I'm going to go out another 30 days and I'm going to sell 3. to pay for this. Does that make sense? I know what you're saying. Hey, I'm already spent this
Yeah,
money.
you're just putting on a new position.
Yeah, I'll be putting on a new position, and I'll do it at the time when this GTC order fills. So as soon as this one fills, I'll go out. Let's say it fills tomorrow. Then I'll go out to 100 days and I'll buy or sell 3 to pay for this. So yeah, I'm still going to sell something to pay for this.
So Bobby, it sounds like for tracking purposes, you might want to make that a BS3. I think that's your next number.
Yes, that'll be a BS3
Is it?
when that fills. Yeah. Good, Christian. That's exactly it.
Then you won't get confused.
Well, I'll still get confused probably, but and make this GTC. So we've got now, what's this too, y'all? This is kind of cool too. Now this thing is even going to get stronger because watch, I've got some activity here. Look at this. I've got a GTC order filled ready to close these 12 puts that we initially put on for 20 cents, and they're at 65 cents now. So the day is coming that we're going to have that without those 12. Now, what's that going to look like? Well, if that got filled today, it'd be beautiful. Watch what it looks like. Let's go over here and let's do positions. All right, so everything looks good with my 33,000. What's this? What happens when I take out my 12? Holy Shimon, y'all. Now, does everybody see what we got? We got $77,000 worth of protection to the downside. This is what we're doing. We're building a wall. Now, can we do this? I think we can. But again, I want to make sure that I tell you the good, bad, the ugly. I tried this in 2020 after I had already done it, after I had already doubled my account, 208% up. And I was unable or unwilling to do it. And I tried. So I don't know why I stopped. I don't remember. I don't think I have good records back from 2020 on a spreadsheet to go back and see why it didn't work. But what we're trying to do is to build this and build this and build this. So ultimately, this is going to be millions of dollars. That's what we're trying to do. But we got to do it smart and we got to do it organically. And there are times that we're going to have to go in and buy additional tranches or diagonalize them, right, to do this thing up. Now, one of my thoughts is, and I'll just run this by you to think, one of my thoughts is to maybe do a diagonal like we did today, one time per week. So I did this one on Thursday, maybe next Thursday, or maybe do it on Wednesdays. Just put on one of those per week just to see how it does and keeps building this thing up. I just don't want to get in trouble. I don't want to get in trouble. And in 2020, when I tried to do this, maybe it's that I didn't have the patience, because this is a slow build, y'all. Most days when you and I come together doing this, it's going to be watching paint dry. There's not a lot to see. And not a lot of moving pieces. But if we get that volatility spike that we got the other day, we're up 28,000. Well, we're not up 28,000 because we got those 12. But you understand what I'm saying. If it happened today, we would be up $10,939. So what we did is basically went from hitting singles every day, single, 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 to strikeout. Well, they do the K, the strikeout, the strikeout, the strikeout, home run.
Hey, Bobby, this is John.
Hey, John.
Just a thought, as you started continuing saying maybe you do that next Thursday just to kind of keep the progress and the build going.
Yeah.
Two comments. One, I think you got to start at the same point you started today. Look at your risk analysis tab and see what adding the 3 short puts would do.
Yeah.
It's possible that those 12 might, I mean, who knows where the market's going, but it's possible those 12 might get harvested, in which case you could probably just add the short puts without even having to add the long puts on that BSH3. That would be one thought. And then the other thought is, if you look at your risk analysis tab and you don't need to because of what your risk analysis tells you, then, why jump in right away would be the question.
Yeah, you're exactly right. Maybe there's no need to. And John, the problem is, and this is what we're talking about, the problem is, I like activity. But just for the sake of activity is not a reason to do it. The easiest thing to do is I want to keep y'all all entertained is let's go full back to the 111s and let's just hedge and do the same thing. But I think we can build a better mousetrap here that would allow us in a uncertain election year when half the country hates the other half and the other half hates that other half, where we could possibly have, all kinds of volatility in this election year. It allows us to do something very, very special. Now, maybe it takes 2 years for VIX to pop back up. Remember, we looked the other day. It's not uncommon. Let's see our friend VIX again. Our friend VIX.
Hey, Bobby,
Hey, Hal.
one thing you need to monitor is now your valley of death is going to be more days. You're going to have to, like, if the market started going down and you didn't harvest those diagonalized shorts, then you're going to have to watch those in case they don't get harvested, because the diagonal longs could close out and leave you with the
Yes.
shorts.
Yes, that's exactly right. And I think, Hal, the spreadsheet does a good job. I think the spreadsheet will actually tell you to close those shorts if the if the longs haven't filled. I think I've built a spreadsheet to say, like, this one will say close on the auto say if this is down to 0 days. Now I guess we could try that. Let's see if we did this. Let's say we did 1 day on that instead of 43. Let's say we said 0 days on that one. Yeah, see, once that gets down to 0 days, the close button pops up here for me to close the shorts. But what we think will happen, now we not necessarily sure, but we think that we'll fill those longs in that same expiration before these loans go off. That's the plan. That's the plan. It's kind of cool though, isn't it? I hope y'all like this. Yeah, I'll try to get that diagonal set up, posted again. I thought I posted it somewhere, but I'll do it again. All right, guys, great session today. Can we have the patience to do this and see if it's going to do? And I think we can, as long as the plan is to look here. We got to look here and make sure that everything. So what we did today is we took our protection from 24,000 for a 20% drop and a 40% move up in volatility, and we bumped it up to 33,000 today. That's what we did.
One other thing, are you going to do any of the longer time frame?
I may do that. The reason I like doing my subsequent ones around 60 days is the decay works a little better in getting my longs filled, but I certainly, anything over 60 days, I think is fine. All right, guys, great session. Hope you have a wonderful day. I will see everybody tomorrow.